Good morning, good evening, good afternoon, traders. Steve here at LogiFX Trading, and welcome to Daily FX Analysis. Things looking a lot brighter today, guys, than the last few days. And we'll get on to the reason why in a moment, but just running through yesterday's economic calendar, a lot of green, that's supposed to be green, by the way, a lot of green in there across the board, guys, and then we get down to Fed Chair Powell testimony. Now, what I've been saying, well, what I said yesterday and the day before was that, with this Omicron, some people call it Omicron, we need to be very careful because the market had a bad reaction to it on Friday. Wasn't good yesterday either, but it wasn't as bad as what I thought it might have been. And Monday was quite neutral, as it were. It's still out there, guys. We're still trying to assess, I mean the experts, trying to assess what effects it's going to have. But the message that we're certainly getting here in the UK from the government is go about your normal business, which includes obviously making sure you're doing COVID tests, making sure that you're wearing masks, etc., etc. The scientists are saying, well, would prefer if you can work from home, and one thing and another. Now, obviously, the politicians have a reason for saying, nothing to see here, and that is that we're coming into Christmas, and it's an emotionally sensitive time for people, and the government doesn't want to overreact to Omicron by locking everything down. Then it turns out it wasn't a big deal. But scientists being scientists, they're saying, well, possibly could be a big deal. So maybe just be a little bit wise. So at the end of the day, some people will be wise and some people won't. But the market seemed to be responding well to that. Then we got Fed Chair Powell testimony yesterday to the Congressional Committee on Banking, Housing and Urban Affairs. And he basically came out and said, we've got to get rid of the word transitory. And it was him that brought that word in. We've got to get rid of the word transitory and deal with inflation. And as he said that, the dollar started to shoot up. Now, obviously, I didn't jump into it because when it shoots up like that, you get a reaction to it and it comes off again. But the important thing is we found our direction for the dollar, which is it's going to continue to rise. And that was the big fear I had over the last few days, was that we'd been calling the dollar long, and was this Omicron going to be the thing that changed the Fed's direction? And out of the horse's mouth yesterday, no, Omicron isn't the big deal for the Fed. Getting inflation under control, getting employment going, supporting the economy. Well, the economy's doing well, but supporting the economy by controlling inflation to the best of their ability. And therefore, he actually said they might have to bring tapering forward, the rate at which they're tapering forward, and which is almost the opposite of what I thought he might say because of Omicron. But they're basically saying we're not letting this slow us down. So it's full steam ahead, guys, for the meantime. But let's just have in the back of our minds that the market may well react badly to any bad news about Omicron, guys. Okay, so there we go. That's kind of what we taken out of that yesterday. I thought it would have taken us longer to get to the point where we're saying, well, we've definitely got a direction in the dollar. But in the for this foreseeable future, which could be tomorrow, for this foreseeable future, dollar long, which then gives us great direction on everything else, guys. Okay, so today we've got GDP in Australia coming in at 3.9, higher than expected. Good news for the Aussie. And then we've got market manufacturing PMI and ISM manufacturing PMI. Now, the one thing that I had been saying earlier in the week when we were looking at all the information coming out was that if Omicron has become the big deal, then all of these figures wouldn't matter. But Powell's basically said, no, the figures matter, the economy matters, and this is what we're sticking with. And that seems to be a similar message that's coming out of the UK, which means that we could well see the Bank of England going ahead with their thought process or their action of increasing interest rates as well. Okay, that's that. Let's get on to it. We had quite a long session yesterday, so I'll try and make this short today. I've been zooming out a little bit and having a look at the dollar. Where are we with it? This is a daily time scale. Went right out to the month, guys, just to see what the top side could possibly be. But we're not expecting to go there. But just to give us what we call the big picture. And there's the big picture since 1986, guys. So obviously there is possibility for the dollar to go above 100. But that's not, we're not saying the dollar's going to go back to these sorts of levels, guys. We're just saying that it's happened before and therefore it's possible. Can you draw something like that in there? I don't know, guys. I'm just having, this is what you do when you're looking at these things technically and saying, well, where could it possibly go? So the point I'm making is that if it goes higher than where it is, and even if it broke through there, which I doubt, but if it broke through there, you wouldn't be breaking any new ground. That's the important thing, guys, because you've got to always be careful when you're breaking new ground. So let's zoom in. We've had a bigger picture. So where can it go? Well, there was the move yesterday. And obviously, when you see that happening, it's very tempting to jump into it. But what happens, and this is the reason we don't trade the news, guys, what happens is that wherever it goes, listen, if you got it from there, you're still going to pay a whack of money because your broker's not going to give you that price. They'll give you a price there. And potentially you could have done okay jumping into this yesterday, but with no idea that it was going to go that far. And as a strategy, it's bad news, guys, because invariably it reverses itself. People take their profit. So people jumped into it, then they took the profit. We're back down here. We're still in this corrective phase, but the important thing for me is that the dollar trend should, whether it's going up at that rate or whether it's going to accelerate off at that rate. Obviously, we don't know that, but the dollar should stay strong. It should have more upside to it. And of course, it could correct a bit more here before pushing on up, or it could go long from here, guys. The important thing is we've got the general direction of it, which should continue to run long. Now, the end's a little bit more problematic for me, because yet again, I went right out on this to weeks and months, and just looking for technical structures, guys, to try and give us a clue. Now, obviously, technicals only work to a certain extent, guys, and there are times and places where, with a reasonable degree of probability, you can say, do you know what, this looks like it's going to go short. The fundamentals tell us it's going to go short, so this would be a good time to short whatever chart it is you're looking at. But you can't, and this is a mistake a lot of people make, is you can't get to a 61.8 fib retracement and then think, well, it's definitely going to go long or whatever it may be. Those are potential entry points if you've already determined the direction that the overall trend is moving in, and you have a retracement to that level. Then with a very wide, give it a lot of space, it could be a half decent entry point. But you've got to take it all together, guys, and not just one thing. Now, when we were going up here, I drew that and I said, listen, this eventually will break and drop, which it did. And then we had to say, well, we've come down into that area, which in the past it's always reacted off. And we went through a few weeks or maybe even a month or two of wondering, was this that was being formed one of those, guys? and we were looking for it to push back up into this corrective structure on a higher time scale. But it didn't. It broke down through, and then at that time we said, well, if we got some sort of zigzag or some sort of corrective structure here that was recognizable, we could well have some sort of zigzag. Now, what we were potentially looking for was, something that maybe looked like that, some sort of flat or expanded flat or what have you. But in the end, it was a running flat. And once I identified it as a running flat, then I was kind of thinking, this looks very good for breaking out and running short. And that's what it did. And that's where we were up to until Omicron came out, and all of a sudden we get a rush into the yen for safety. So fundamentally, we're there for a good reason. If Omicron turns out to be a big deal, then that will be the bottom for the yen for the foreseeable future. If it turns out that it isn't anywhere near as dangerous as what it possibly could be, then you could see the yen dropping off again, guys. In other words, this structure, whatever it may be, isn't finished. It's come down. It's in a corrective phase, and there could be another leg down for it, guys. I'm not going to call that today because obviously we're still in the initial 2 to 3 week period of Omicron before we're going to find out, what the experts have to say about it. But if they come out and go, do you know what, this thing is the tail end of it, it's mutated itself into something that will eventually become a seasonal flu, then you'll see, all the worries about coronavirus dissipating, guys, because that's what happened back in 1918. Was it 1418? No, it was the war. Back in, the Spanish flu, as they called it, back in the First World War, that killed 50 million people, more people than the actual war killed, apparently. It eventually mutated itself into a seasonal flu, guys. This will eventually do the same thing, but it's when that happens. So we'll have to see. If this turns out that it's not as big a deal as Delta, then we could be running in that direction, guys. But we need the next few weeks to tell us. So I'm not going to make any decisive claim about the yen at the moment. The only other thing I would say about the yen is that apparently, now I don't specialize in Japanese stock market guys or their companies, but apparently a lot of their companies are really nicely priced, guys. And part of that could also be the fact that the yen is so weak against the dollar. But you could well see inflows into the Japanese stock market, which would automatically push the yen up, guys. So we've got to take that into consideration as well. So for the meantime, I'm just going to leave the yen alone. It was an opportunity. It's run its obvious, move. It's made its move. And now it's time to look for something else, guys. And that's the way to trade. Look for something that's blatantly obvious. Focus on it, trade it. And then once it's run it seems they've run its course. Now, I'm saying that, look at that. That's clearly 5-wave there. Look at that pull back there, guys. And this is a smaller scale, but you had to push down. Look. And then you had to pull back up into before it ran again. So is it possible that this runs again like that? Let's keep an eye on that, guys. Anyway, DXY. Can it accelerate on up like that? Possibly. I'd prefer to predict that it would maybe drop a bit more and come up, in this sort of manner rather than taking off like that. And the reason I say that is basically because if you trade in a way that you think it's going to take off in an impulsive manner and it turns out that it's going to run up, continue to run up in a diagonal or a corrective structure, then you get in at the wrong place, guys, and then it corrects down again, and then you get out, and then the next thing you know, it's back up there. So just be wary of that, and that's all down to trading strategy. The main thing here is that we've established that the dollar is going to stay strong. It's not going to be weakened by the Fed. The economy in the US is going well, so there is more upside to it as far as I'm concerned. And we'll look at it closer. Let's have a quick look at it now, guys. Because when we got to here, as we do, we go, right, it's moved. You're going to need a correction as a setup to go again. Now, that's a correction. Is it a setup to go? Well, let's go and look at some of the currency pairs. It's a bit messy, guys. Yet again, when we were here, we drew something like that and we said, listen, the next move's short. And then Omicron made me question what that analysis. But for now, we're going to go back to that analysis, guys. I suspect the next move in this will be short. Can I be wrong? Of course I can. Pound. Little flash crash on the pound, which was actually positive for the dollar. The pound's a little pound dollar. I wouldn't trade pound dollar, guys. Aussie. Do you know, I was so close to getting into the Aussie US dollar long, and then here I think it was, and then Paul started speaking, and bang, down it came. I'm pretty sure that's when Paul was speaking. Now it's made a bit of a recovery since, guys. Excuse, but that's the profit take off that move. So just let it settle out. I think eventually it'll create some sort of the problem with this one is this. When you get something that looks like that, you need a correction on it, don't you? You've got that. You need some sort of correction before maybe you say it's going to go like that. So I wouldn't be keen to jump into that at the minute. It's still a little bit volatile at the minute, guys. And there as well, you can see I actually I'd moved that from down there to there yesterday, and kind of thought to myself, well, this could go long. Let that develop a little bit, guys. Not entirely sure what that is. If it turns out that the market wants to short the dollar for a period of time, then this will go long. But no, not for me at the minute. Oil, CAD. Oil, I think, is going long again, guys. And yet again, just from a technical point of view, you've had a move of that size. Surely you need the equivalent correction before thinking about continuing to trade it up. Other than that, you would have to think about shorting it. But I don't see that happening because of everything we said about the dollar. This could potentially start to come long, guys, because gold started pushing up long over the last couple of days and then collapsed again, guys. So I don't think the Swiss is going to get a boost from gold price going up. So this potentially could start to move in that direction. This, yet again, I think it'll move long, but we'll have a period of correction here, guys. How big it's going to be, your guess is as good as mine. It's one of those cases where you put a small trade long in it, and if it goes a bit further, you put another small trade in it, and then it starts to move long. Euro yen, Aussie yen. What's going on with me? Dollar yen. Sorry, folks. There was the move up in the US dollar yesterday, guys. And then the little pullback, and then it's continued to move up. Now, What were we looking for here? Oh, yeah. Because remember, I was trading this long. I got out of all those trades, by the way, guys. I just took a hit on them. And unfortunately, with the dollar, I got out of it here. and then we got Paul, so I could have almost got back there again. So is that going to happen? I don't think so. We were looking to go long from here. This has dropped. There's a bit of a structure going on there. I don't think it's a running flat, guys. I don't see the fundamental reason why that would happen. So I suspect there's going to be upside to this, but I don't see an end to trade it. And also, when I get something wrong, I tend to stay away from it because psychologically, if you get something wrong, you lose a bit of money on it, guys, and then you get back into it again. If you lose it again, it can really, play on you, even though it's only small amounts of money compared to the size of the account. It plays on you, guys. So I tend to stay away from something that I got wrong. Gold, well, as I say, we were looking for gold to break out. Didn't happen, guys. Even with Omicron and all the rest of it, didn't happen. I think gold for the short term, particularly with the Fed, with all of the, with inflation being where it is at the moment, what the market's doing is waiting to see what the reserve banks are going to do, and the expectation is that reserve banks will start to increase interest rates. Some of them already have. They're tapering. They're cutting off the money supply to try and deal with inflation, and therefore there's a solution to it. So the market isn't panicking, and therefore it's not diving into gold. The time it will dive into gold is whenever the market panics and we start seeing a big correction on the stock markets, guys. And I don't think that's on the cards. I thought it might have been on the cards last Friday. There could be a slow move down, but I don't see any big move up for gold in the near future, which is unfortunate for me because I have a few gold mining shares and an ETF on small gold mining companies. But nonetheless, gold mine companies still make money at this level, guys. This is a pretty healthy level for gold to be. From a mining point of view, silver, similar story, guys. Silver hasn't broken down through here in a long time, $21 or thereabouts. I can remember when it was down at 15, and a lot of people were just saying, guys, this is so cheap, just buy it. Don't be worrying about what it does in the short term. Buy the thing, and it will go up from here. Now, this is a daily time scale we're talking about here, guys. And if you're a long-term investor, great. If you're trying to trade, makes life a little bit more complex, guys, because you're trying to time the market, which is always very, very difficult. But that's what we do here on a daily basis. And certainly here, it went down to 11. So, you would have had a shocking few days in there if you'd have bought silver at 15. But as you can see, 15's down there, guys. Look where it got to, 28, 30. You would have doubled your money. So at the moment, we're in this corrective structure. It looks very, very like some sort of flat. With this, it's a diagonal, guys. If this is a C wave, and you don't often hear me talking about waves unless they're blatantly obvious. If this is a C wave, I would not be surprised if we got a fifth leg down here, guys, with this being an A. Let me draw it again properly and uncover it. We did say it would be fast today. So we'll finish this and then we'll run. Looking for an ABC. There's an ABC. So I'm looking at this and saying, you know, are we getting an ABC? It's a flat correction, guys. But if we look at the C on its own, I think you can see what I'm talking about here, guys. This is the one. Now, it could just come to there and be a truncated flat, or a truncated fifth. Brain's not working this morning, folks. Or you could well see a wave of that degree of magnitude, which could well bring it down into that sort of level there, guys. And if I saw that, now I'm not planning to trade that down, guys, because it may or may not happen. But if silver did come to there, I'd certainly be looking to trade it up. So in other words, if it come down around $20, I'd certainly be looking to trade it up. So that's one we might be talking about in a few months' time, where to get down there. Bitcoin, I think it had a bit of a recovery yesterday. Yep. Hasn't broken out of that corrective structure yet. Basically, what I was saying is it could be more downside to it, but I'm going to take that off. Reason being that the fear of Omicron may have dissipated for the short term anyway, and there could well be more upside to this, guys. Ethereum will have done this. Ethereum's gone bananas, guys. Nice. Can it break on through there? Certainly, possibly could. But having said that, that's not an entry point, guys. You're looking for some sort of correction off that to give you a setup. Oil starting to make a bit of a recovery there. We'll have to see where that gets to. Don't see. I think this is overcooked now, guys. With people saying get on with your normal life, have a normal Christmas. Travel be a little bit restrictive because you're going to have to, do all these PCR tests, etc. But I do think they'll probably open up again once we get an assurance that Omicron isn't as bad as what we thought it may be. EuroCAD, I can't see that pushing much higher, guys, particularly if the dollar's going to continue to strengthen. Although there could be a period, if the dollar continues to correct, you could get upside to that. But if oil corrects, then if oil recovers, sorry guys, that my brain's not working this morning. If oil recovers, then the CAD will get a boost from it. So I don't want to touch that, guys. Euro Oz, that's a nice zigzag. Is it getting ready to do that? Certainly something to think about. Euro New Zealand, well, we did say it was a 5 wave and be careful of it yesterday, guys. And we're getting a correction which may come into there. You could end up with some sort of flat running here. You could end up with a head and shoulders that then breaks. I don't trade head and shoulders, but we're aware of them. So it could push up to there and then start to break at that point. You could be looking for a trade down. Euro yen. I'll stick with that, guys, but I would need to see it breaking out and setting up. Euro Swiss, I'll stick with that as well, but I'll need to see it breaking out. I'm not going to jump in there. Put an X through that. Pound CAD, leave it alone, guys. It's running flat. Pound Oz. This is the one I was in there, remember? And then I accidentally get out of it. But we did say back here that it was going to go long, guys. I can't remember. I don't know why I had that in. Maybe I was looking for a setup to get in. Potentially more upside to it. By New Zealand, same thing. Potentially more upside. Let's just put that into there. That's what we were looking for. Pound Swiss, leave it alone in the meantime, guys. But potential upside. The reason I'm saying leave it alone, because if we get another shock, you may get a safe haven run into the Swiss. It's the same with the yen, guys. Just be careful with the yen at the minute, guys. Pound euro. I suspect there's upside to this, guys, but let it break out and give you a setup. Pound yen. Stay away from the short term. Pound Oz. Yep. I got out of this about there. Would have been better getting out today, but I'm not going to beat myself up about that. If it turns out that Omicron isn't a big deal and the yen continues to fall, we could well get something like that. But there's plenty of time, guys. Let it develop. Let it give us a setup. Let's get some more information on it and then consider trading it. Aussie yen. Aussie New Zealand. Yeah, I think there's upside to this, guys. Impulse there. Big drawdown down into 80% or something like that. 88%. Started to move up. Impulse. We're getting a correction. Could well be another impulse up through there. Might even consider trading that. Aussie Swiss. It's come into that level. Could well be upside to it. Aussie CAD. I don't trade this, guys. I don't get the I don't understand the fundamentals between the two of them. I probably could go out of my way and make an effort, but I have too many other things to think about, guys. Swiss yen. Just leave it for the meantime. Possibly long. CAD Swiss. Well, let's see here. I would love to try and trade this back up within this. If you just do decide to do that, get a tight stop loss under there, guys, in case it does that, and then you don't lose too much, and it comes nicely for us in a couple of months' time. That would be, you take your profits. CAD yen. $61.8. Let's see what's going on in there, guys. If it's full steam ahead, then that should go long. Do you remember we were looking for it to run long here? So if Omicron, if they'd have come out yesterday and said Omicron's not an issue, that probably would have done that. Now they haven't come out and said that, but over the next few weeks, let's keep an eye on that. And if it looks like that's going to be the case, then potentially there's a long trade in there, guys. New Zealand yen. Well, we were, look, that's the other one I got battered on. Just one of those. Every now and again, you do something stupid, guys. And what I did there was something that fundamentally, if you go back to training, don't put all your eggs in one basket. Now, I traded USD yen. Now, why am I telling you this? Because we learn from our mistakes, guys. Not USD, AUD. You can't even read that. That's ridiculous. USD JPY. AUD JPY and New Zealand dollar JPY. Those are three trades it took, guys. And the yen went like that. So I lost all three once. That's why you don't put all your eggs in one basket, guys. Now, it wasn't the end of the world, but it's not nice, particularly when you have strategies and training and experience to tell you not to do that. So I didn't put any real thought into it. It was a hunch, and I got it wrong. Right. Does that mean that the hunch was completely wrong? No, because this could still be a thing. That could still be a thing, guys. Am I going to jump in today and try and trade that? No, but I will keep an eye on it. And at some point, when we're a little bit further away from where we are at the minute, I may well decide to trade it. Aussie CAD, sorry, New Zealand CAD. My goodness. Leave it for the meantime. And New Zealand Swiss, possibly the same story as the yen Swiss, or yen New Zealand yen, guys. It's come into that level. We were already looking for a breakout long, but let it break out, let it set up, let's get a fundamental reason, and possibly that's going to go long. Sorry, guys, whatever reason, the brain's not working at the moment. It's 10:51. Should be working. There we go. I'll speak to you all again tomorrow. Bye for now.